Joining us now for where he sees opportunity in the fourth quarter is JPMorgan Managing Director Stephen Tusa. Stephen, good to see you. So you like near-term Veralto, but we're also right up against your price target there. You also have overweights on ANSYS, which is 15% below your price target. Tell us the why behind those calls.
Well, first of all, thanks for having me. I'm not sure it's Veralto. It's Vertiv, which I think you and I have talked about before in the last several months.
Oh, Vertiv. Sorry.
It's Vertiv. So we are still very positive on Vertiv. It pulled back with the kind of AI trade scare of the summer, which we believe was a great buying opportunity, and it remains that way as the data center markets are, far and away the best we've ever seen in our sector, really covering it for 25 years. And Vertiv with 75% exposure is still the best long on that. Now we're a touch away from the price target here, but obviously as we roll forward to discounting 25 and 26, which happens over the next couple of months, that price target will invariably move up with a new year of earnings, and so we'll see how that analysis shakes out. But $100 should be thought of as kind of a minimum fair value here at this point in the year. So still, we love that one as our top pick here. On ANSYS, a little bit of a nuance there. They're currently getting acquired by Synopsys. So it's not really an active call right now, given Synopsys has put in their bid, and there's not going to be much of a change there. So still love the assets, but that one is more of a merger arb play than a fundamental call right now.
And I know you don't cover software either with Veralto.
Well, I do.
Okay.
I cover the industrial software companies, including PTC and Altair and Autodesk.
But not Synopsys, I meant in particular. So we'll have to keep an eye on Synopsys ourselves.
Yeah.
In Q4, you also like 3M and Johnson Controls. Tell us about how much of that is because of a turnaround, perhaps, in 3M there, or what else is behind it?
Yeah, it's almost the vast majority of both of those calls are because of turnaround. So when you think about the barbell we have on in industrials, it's the growth names like Vertiv, like Eaton, to a degree, based on data center growth. The other side of the barbell is what we call idiosyncratic stories that have some sort of margin upside from a management play. And both of those stocks, new management at 3M came in. We think there's going to be a very nice trajectory on margins. They're going to unveil that probably in the first half of 25. But in the meantime, we see upside to numbers for a very cheap stock. And for JCI, there is a management transition that's going on here. The older CEO has announced he's stepping aside. There's going to be a new management team announced by year end, and we think some of the optimism we've seen at 3M will be analogous to what we see at JCI going forward. So both of those very different than the growthy names, but more of idiosyncratic margin upside with cheap valuation.
Yeah, it feels like there's two buckets here. One are the AI levered industrial names, and the other is some of these turnaround names like 3M and Johnson Controls. I'm curious how closely you're tracking some of these industrial players that do have exposure to China, especially given the fact that China is now pulling out the stops with stimulus. Over the weekend, most recently, some of these actions that are geared towards a turnaround in the real estate sector. I mean, a name like 3M, for example, this has been a drag for that company.
Yeah, I mean, for 3M, China it's a little bit of an indirect exposure because they sell into electronics markets that are then sold back to the U.S. So it's still a bit of an export play and not as much of exposure to what the government there is trying to at least sustain and save, which would be the property markets. I think our Chinese analysts that cover this stuff would say that you have yet to see the bazooka style stimulus that you saw in 08-09. So it's still a bit more of a stabilization exercise than a true effort to stimulate activity on the ground. But if that were to happen, we think the biggest beneficiary in our group would be either Otis. They make elevators. They have about 15% sales exposure over there. Obviously, a big play on the property markets. And then secondarily, DuPont, who has roughly 20% of sales to China, some of which comes back here through electronics, but a decent amount of which is being sold also into China for China. So those are kind of the two most China lever names in my group, that we're optimistic. We're more optimistic on those today than we have been in a while. We're recommending DuPont. Otis, we still think there's a bit of an earnings downside from China because there's a lagging impact from the downturn in the property market there. But both of those could look a little better in a few months as we get more visibility on the upturn there. But we're not bearish on China, given what's happened in the last couple of weeks.